Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse with Bolt Marketing, and we did have a higher day in the grains, a lower day in the livestock futures. And DuWayne, thanks for joining us there from the tractor cab. You guys are finally into tillage work, harvest all wrapped up for you now?
Yeah, really close anyway. The crew's over there doing a couple last fields for us, and I got kicked out of the grain cart cab by one of our younger producers, I guess. So that's good. It's nice to see the next generation come up. So yeah, I'll go sit and do some tillage equipment. That's just fine by me.
Yeah. Soybeans to the plus side again here today. Again, we're putting some Brazilian weather premium in, but we kind of got stopped up on top of the market with some resistance areas on the charts again.
Well, and yeah, I think it's gonna be hard to bust through that $14. That was a point last week that we couldn't get through, and this week it'll probably be pretty tough as well. And early on this morning, I mean, we were up sharply to get to that price level. It probably needed to be sold off. And remember, this is a weather market, even though we're at the end of November. So with every change in forecast, we sell off or we run into longs, one of the two.
So if we do not get confirmation of these forecasted rains to the level some had thought in Brazil, with low volume on Friday, could this market take off, or is it going to have to wait till maybe next week or Sunday night?
Well, I think that totally depends on the forecast, obviously, but no, I think we could run through there on Friday. That's become kind of a famous day for us. It seems like a lot of people don't even realize the markets are trading, and that's fine. They should be with their families on a Friday after Thanksgiving. But with low volume like that, Michelle, if we get a hot, dry, extended forecast, there's some guys talking about this heat ridge moving back in the first week of December. If that forecast comes out 8:30 Friday morning, we could definitely go up high enough to push through $14 and then break that resistance we've been talking about.
So corn has been more of a follower of soybeans. It's not really trading in earnest that South American weather yet, is it?
No, it's not, but it really probably should be, because if we're trading it due to drought and the soybeans are in such rough shape, well, that means the soybean planting is being delayed, which we've seen earlier in the numbers this week. If that soybean crop gets delayed, then they just might not even plant some of the second crop corn acres. And remember, if you don't plant it, well, that's bigger than just an acre or yield reduction. That's a big deal. But I think the problem there, Michelle, is two parts. One, we have a lot of corn on hand. We're looking at an ending stock, above 2 billion and probably increasing as we go on. Export demand's solid, but not great. And also, we talked earlier, farmers selling up above the market is going to happen every time we see a rally, and that's going to be a problem for quite some time.
Yeah. Like look at today, up a half cent on December on the close. We're up only 1.5 on the March when you've got both soybeans and wheat higher. So pretty disappointing. Some of that is forced hedge pressure here too, though, because we're rolling, we're getting into option expiration and whatnot.
Yeah, you're right. I'm glad you brought that up. Friday is December option expiration. So you expect a lot of volatility there too. And when I think of that, I think of basically just crazy trade. I haven't figured out exactly which way it ever goes. If I did, I'd obviously be a rich man. But all I know is that it makes for a volatile trade. And you look for those strike price levels and options that will have a lot of volume. Like, for example, $5 for D's corn. There about a week ago, I was wondering, well, maybe we can spike all the way to $5. That seems like a long shot right now, but maybe it's possible. But the problem is, like what you mentioned, we rally a little bit. You also got a lot of cash sales or HTAs that farmers have to price before Friday as well. So I think those are hitting the market as well, just like you mentioned.
Yeah, so we're kind of just stuck here. Wheat market did take off here today. Was that just short covering? I mean, we're so oversold after I think we hit 2-year lows again here in Kansas City wheat, even this morning.
Yeah, the wheat market is really sad. I keep telling guys that, we should be at a harvest low. It should start to rally. And seasonally, that's all true. But we just don't have any bullish news, any bullish spark to get that wheat market to start going. Russia keeps undercutting everybody in the world. I think they're getting close to drawing the line in the sand where they're saying they're not going to go any cheaper. And I really kind of question how much more exportable wheat they really have. So if we could get a little bit of business, maybe we can rally. The US dollar's been down sharply here the last few trading sessions. So maybe the wheat market's finally just reacting to the lower US dollar as well. But I don't have any bullish news to tell you other than short covering in wheat.
Yeah. Demand's still an issue, though, isn't it?
It really is. We don't have these huge supplies, burdensome supplies that we've had in recent years, but we also just don't have that demand either. No, it really isn't there for the U.S.
Yeah. Cattle market setting back today, and just like yesterday, we open a little bit better, and then it looks like the funds use that strength to sell off. I mean, the psychology of this market has really turned since that last cattle on feed report, hasn't it?
You know, it really has. And I know the cattle on feed report last week wasn't as bad as expectations, and that's great, but it wasn't a bullish cattle on feed report, was it, Michelle? I mean, we still have placements higher than a year ago. Now, that number, I should mention, that number should really be looked at a little deeper. If you look at like a 5-year average, I know the placements are still down. So, I mean, we don't have a huge herd. I don't think we're rebuilding the herd yet. But this market and this trade action, Michelle, tells me to be bearish. And it just seems to sell off rather easily. And even bullish news gets sold off by the end of the day. And it seems like that was more of that today.
Yeah, and even though the market had like a $23 correction, I think in the February live cattle from the high to the low last Friday, November 10th, man, the funds are still kind of long in this market. You wouldn't have thought that, would you?
No, you're right. That's concerning to me. I understand, you know, we could use it and say, well, the funds are still long 37,000 contracts. That's a sign they want to stay long. Maybe, or it's a sign they got 37,000 contracts they could still sell out of as we go into the winter months. Now, I know seasonally, we usually put a seasonal low in and start to rally around that December 1st, that first week in December. I'm just a little worried that might not happen this year. And, you know, you mentioned the support level for February cattle at 173.5. I think it was the contract low. We're 176 now. I was looking at weekly charts, you know, all the way from COVID till now, we've had a very great upward trend line. But we could drop all the way down to a 166 and still be in that upward trend line. And I guess I'm kind of targeting a pullback to around that area. And then maybe we can talk about the tight supplies in 2024.
Yeah, that low we're talking about was hit on Friday, November 10th. That was before we started to see that little bit of a correction there. But a lot of times the weekly charts are a lot better indicator, aren't they?
They seem to be, especially in something like cattle. Yep.
What about the hogs? Okay, gap lower opening this morning. The lean hog index continues to hit some new lows here for the move. Is that the problem, or this China story that we heard about with their inventory?
Yeah, I think both stories are a problem. One, the U.S. production has fairly high weights, really have been gaining lately more than anticipated. But yeah, overnight, China announced that their hog herd is still what they quote and say larger than they want it to be at, like 42.4 million head. They want it smaller, I guess. It was a reduction year over year, but their goal is to be even smaller. So that means they got more meat to work through, which we're going to assume means less export demand for us. So I think market sold off on that news today.
Yeah, and I've talked to you about the fact that it seemed like the rally that we had in hogs really coincided with the pullback that we had in cattle with those cattle hog spreads. And so that's something that's being adjusted now too, isn't it?
I know people don't like when we talk about different spreads, and that's a boring excuse of why markets move. But spread activity is actually the largest activity in cattle and hogs. So yeah, the cattle hog spreads are a big deal. And I think you're right. I think we're seeing some unwinding of that.
All right. All right. Thanks for joining us from the cab. And, you know, you don't have too many more days you can be in the field here before it turns winter in South Dakota, do you?
No, I think you're right. I always say, oh, if I just had a few more days. But I think this time I'm going to be thankful either way. We had a really good fall.
All right. Well, I'd like to switch positions with you. I love doing tillage work. So, all right.
Anytime.
You have a good one. Happy Thanksgiving
you too.
too.
You too.
That's DuWayne Bosse with Bolt Marketing and Markets Now.